All right, welcome to the weekend video. This is Enda here from bullwaves.org, and I am going to run through the markets from an Elliott wave perspective. And if you are interested in nightly Elliott wave analysis, now that you mentioned it, head over to bullwaves.org and check out the membership offers. Right, now that I have my coffee, and now that it's Friday morning, now it's time to review and preview what happened this week and what might be on the cards for next week. Now, I know the doom and gloom, or the doom hasn't started just yet, or maybe it has, and you just haven't noticed it. Let's get into that a little bit later. But first of all, we're going to go through the FX markets, and we'll see what's on the cards here. Now, you'll see, or you may notice, or you might have noticed, if I go to my weekly chart there, this is the pattern that I've been following in Eurodollar, and it basically involves an expanded flat correction in a B wave. So we've got A wave up, B wave down, and then a C wave rally yet to come. So this rally has not materialized, obviously, just yet. But there is hope on the horizon, let's say. Okay, let's get the 4-hour count. We can see that I was tracking an ending diagonal here within wave 5 of wave C here. And that should complete the low of wave B. Now, so far, we had the 3 down in wave 1, 3 up in wave 2, 3 down in wave 3, 3 up in wave 4, 3 down in wave 5. So completed pattern, and then we got a nice rebound off that. So everything was, as you might say, kosher to that front. Now let's break out this pattern here on the hourly chart, and we'll see what we're dealing with this week. So we've got a 1, 2, 3 triangle fourth wave, and then a nice spike rally to finish in wave 5. So we've got I would say a qualifying 5-wave pattern to the upside. And here's where it gets complicated, obviously, but a possible 3-wave decline. So maybe an ABC decline. The early action this week was just messy, let's say, to say the least. It's like, well, the market was pretty much on hold, and then everything kind of flew off the handle yesterday. So knee-jerk reactions everywhere. The everything rally came in, the everything collapse came in first, and then the everything rally came in. So I'll tell you how cohesive people's viewpoints was, no matter what. I always love, you listen to, I don't listen to it very much anymore, but if you listen to pundits on Bloomberg or on CNBC, and they're like, if this happens, then that will happen. It's such a logical, action reaction type of scenario that they always, play out. If CPI is above 8%, then the market's gonna collapse, and then CPI comes out above 8%, market dives and then rallies massively. So it's like there's no rational explanation. There is no rational. Yesterday's action should solidify in your mind that there is no rational action reaction happening in the market. Now, I think we've got 3 waves down. We've got a higher low here. Yesterday's spike rally seems to be the beginning of a wave 1 of 3. So next week I'll be looking for a 3rd wave rally. We'll see. That 95.35 level has to hold. Okay, so let's move on. Here is cable. What I'm tracking in cable is a more complex 3-wave pattern, higher in wave 2 now. So wave 2 here in blue. So I'll be looking for 3 waves up in wave A, and that's where I'm going right now. And you can see here we've got 3 up in wave A of A done. I mean, possibly have 3 down in wave B done. I'm not completely sold on that yet. I don't know. I mean, we might trace out a larger kind of, I don't know, zigzag or flat, or maybe even a triangle. Who knows? Yesterday's spike rally seems to favor that wave 1 of C is now underway. So we'd be tracking wave C, and that will complete wave. Hold on now. Get up here, change you, make you an A, and then put you up here. Okay, so that C wave rally will complete wave A, and then we'll track lower again in wave B, just as you saw on the 4-hour count there. So 3 waves up in A will be done, and then we'll track lower in B. So there's the hourly count again. Like I said, I'm not sure is wave B done. I'm not entirely sure. We'll see how it goes over the next day or so. If we do complete, a nice clear 5-wave pattern, I'm going by the overnight action, and early this morning it looks like a small correction. So I'm looking at this as a 4th wave correction. Maybe wave 5 will come in later on today. Maybe when the US opens. We'll get a pop to wave 5, and then we'll drop in wave 2. So it looks like the next day or so might be just a sideways kind of, drift. We'll complete and fall, complete a pattern and fall into a correction. If this is wave 1 and 2, then we should continue the higher lows on Monday, and then we should probably rally on Tuesday in wave 3 of C. So we'll see how wave C takes hold next week. Let's go with the dollar yen. Again, completing this 5-wave rally in wave 5 of 3, expecting a 3-wave decline in wave 4. Now, the rallies that have happened in the Atlantic pairs have not materialized at all into dollar yen, which you might suggest, that the 3 shouldn't rally together. But hey, that's exactly what's happened. We've had 3 rallies together, even on the opposite sides of the coin, which is strange enough. But we do have a nice 4th wave pattern in place. We do have a possible 5-wave pattern completing wave 5. So, the eventual reversal will happen. When it happens is another question. I will point out also that on the 4-hour count that we have a trend channel now pretty much. It closed out in wave 3, but it's closing out again in wave 5. So we're pretty close to that. The top of that pattern going by at least that gauge. If you connect the 3 previous highs, you can see that we've popped out above. So that kind of shows a slowing momentum anyway. So you can see here from the top of wave 3, peak momentum on the 4-hour count, top of wave 5, lower momentum, and that declining, that kind of diverging trend lines here from the channel to this trend line does suggest that slowing momentum as well. So the internal pattern of wave 5 green, you see we've got wave 1, 2, a rally in wave 3, a rally in wave 3 blue, correction in wave 4 blue, and then we've got wave 1, 2, 3, 4, and 5. Yet to determine whether that's complete now yet. We will see. You see that's that connecting trend line again. We've got a little throw over above it. So the reversal has not materialized in dollar yen. We will see whether we get a chance to pinpoint that reversal next week again. So I'm going to leave it at that. I can't really add much more to it. The pattern has to complete before we get into a reversal. Okay, so this week has been in the stock market. Let's get into the hourly count and I'll see where I'm going with that. Okay, so what I've been doing here is tracking a series of 1-2s. Obviously there's alternate views, alternate counts here that can, let's say, emerge from the mire here and become the most favored or the best fit account. So this alternate account here could well emerge over the next week or so as the best fit, let's say, count. So we could have 5 waves down into wave 1 blue and then rally again in wave 2. We're going to leave that open for interpretation, or open for interpretation, but open. That's that's up to God really, what actually happens in the end. So I know people are going to be screaming at me saying, you've been calling for a collapse and it hasn't happened. The market is so robust. Yeah, I don't think so. We've got 5 waves down, even in this alternate count, 5 waves down developing. maybe we close out around the lower trend channel and we rally again to a further lower high, and then we collapse later on in the month. If that happens, so be it. I think the possibility or the probabilities for a major market event, a major crash, are still so prevalent that I think it's worth tracking the most bearish wave count, and that's what I've been doing. I think it's worth keeping, let's say, if not a focus, but let's say a working thesis, being that the collapse will come, and I know it'll come, but I'm after losing connection there. I know that the collapse will come. The timing aspect is always a hard thing to master, but I know that we're so close to that acceleration point lower, or let's say I know that it's such a viable probability here that I think it's worthwhile tracking it as the main probability. So that's what I have been doing. You can see that over the last couple of days, or let's say over the last week or 10 days, we've basically ranged. So the most, or let's say the most bearish viable count that I have here right now is that we have a wave 1 in pink done, and we're actually just tracking sideways in a second wave correction. Wave 2, maybe it's a running flat correction. Maybe we topped out at yesterday's high after the let's say knee-jerk reaction that happened yesterday. If that's the case, then we have wave 2 done. Then we move lower into wave 3, and then you'll see the count has been proved correct. But even if this isn't the case, then we're probably tracking a fourth wave correction, and we'll fall into a fifth wave, and that'll complete wave 1, and we'll go for wave 2 after that. So, everything evolves. Each new day is new. I don't know the future. I run on probabilities. I run on expected pattern completions. That's the way. I can't tell the future. That's what I'm trying to say here. But the probabilities are still pointing downwards. Okay, let's move on to gold. See what happened overnight. We do still have that possible 1-2 rally out of an ending diagonal fifth wave. Now, the correction that I was expecting did dip quite low over the last few days. We came in, there was quite a deep retracement of the rally. So, there is always that, niggling voice inside your head that says, there's another low in it, there's another low coming. But for the moment, the pattern is still holding, and I'll walk you through this now. Let me just have a drink of coffee. So, a possible 5-wave rally in wave 1, a possible 3-wave decline with a very extended wave C in wave 2. So we've got an A, B, C down in wave 2. Again, we had that knee-jerk reaction yesterday, sharp spike lower, sharp spike rally. So basically flat. The market is actually basically flat for most of the week. Let's be honest here, with an intermittent, blip of life. What basically has happened is maybe in terms of the correction. Oh, there's my connection again. Thank God. So what basically has happened is a fourth, fifth wave spike lower and a 1-2 spike higher. So we've got this kind of reverse head and shoulders creation of a pivot point there in wave C, and we're working off that low right now. So 1642.22 is what I have on my derivative chart, and the cash chart might be a little bit different. It's probably 1642.60 or 50 or something like that. But here we go. A 1-2 rally leading to a third wave rally today. So if we get a rally, let's say back above 1680, 1690 today, that will suggest that wave 3 of 1 is underway. So I would look for wave 1 to be complete maybe by Monday evening, maybe Monday, early Tuesday. And then again, it's a case of creating a stair step higher, a series of higher lows, and we'll work from there. Third rally should be quite strong if that's the case. But always one eye on the low. 1615 is the big no for this pattern. Okay, so crude oil. Let me get into the daily chart. So here's the daily chart in crude oil. This is basically what's happened off the high. We've filled a trend channel actually. So we've basically come down in 3 waves, filled a trend channel, and spiked higher off that level. Now, you could say that this is a correction lower, and maybe I should keep this as a more viable outlook, a 3 waves decline. But in my case here, the B wave top was calling for a decline. So the B wave, if this is that large degree B wave top in place, up around that 127, 130 high, then we should see a much more severe decline into a C wave, and that should be 5 waves down. And we should probably break, $20 again before that completes. We're not there yet, but we could be tracing out a series of 1-2s, and that's what I'm basically working with here. Go to the 4-hour count here. You've got that wave 2 high back at 121. We've got a possible wave 1. So we've got 1, 2, 3, 4, and 5 down in wave 1. Now, there's a couple of ways you can view the action. You could call this wave A, 3 down in B, 5 waves rally, wave C. In that case, we come up in wave 2 blue up to about 97.50 again. And then we reverse lower into wave 3. So that's one viable way of viewing the action lately. Now, you could also go wave 1 and 2, and then go wave 1 and 2. So it could be a series of 1, 2, 1, 2. There's no real way to differentiate between those two actually at the moment, because the main count that I'm running with is actually the lower degree expanded flat. If we break above 97.55, then this alternate view of wave 2 will come into play, and I think then we'll probably still reverse down into a wave 3. So here is the you can see that's the wave 2 high. Actually, I should have a wave 2 label on that. I don't. Okay, so that's wave 2 high, and then we have the wave 1 down, and a expanded flat wave 2. So you can see that 97.30 on the hourly chart. 97.30 marks wave 2 blue. So we've got wave 1 and 2 at 1 degree lower in wave in green, and then we should head lower into wave 3. So on the short-term count, 97.30. If that breaks, then we flip to the alternate count on the 4-hour chart, and that should lead us down into a third wave decline either way. So I think much like the stock market, if there is a viable, if let's say the major trend is still facing down, and there is a viable short-term count that brings that a little bit closer, or that a little bit more visceral. That's what I'm going with here. It's the most bearish viable count, and that still calls for a short-term rally actually in wave 5 to complete wave C of 2. So we need to complete this second wave correction above 90, let's say above 93, but below 97. So we've got the band here where this rally must complete, and then we reverse down into wave 3. So that's the outlook for next week. 1, 2, 3, 4, 5 completes, and then we head lower into wave 3. So we'll see how that materializes over the next week. Let's go to the S&P. The S&P was running a slightly different wave count. It's been kind of running a slightly different wave count all the way along, but you'll see on the hourly count anyway. A clearer, let's say there was a clearer 5-wave count into wave 2 here. Now we've fallen in 5 waves again into wave 1, and we got a clearer new low in wave 1. So that completes 5 waves down, and then we're looking for a second wave rally here. So we get into we've got this 1-2 pattern, quite prevalent here, and very likely to lead to a third wave decline. The let's say the financial or the psycho-financial conditions, or the mood has not allowed for capitulation yet. So there's this lingering long-term mood change that needs to happen in order for the stock market to completely lose its head and, collapse in a kind of 2008 financial crisis type of thing. By the way, the next one's going to just wipe that one out of the water. The 2022-23 financial collapse will be, one to really take the history books, I think. But it seems that there is just that lingering hope, that lingering kind of, people are clutching with their fingernails. They just won't let go of the idea that everything is just okay. Everything ain't okay, folks. The substructure is collapsing into dust underneath our feet, and once it goes, it's gone. So we've got a 5-wave pattern, and this second wave rally, I think, will probably even rekindle those. We had that nice summer rally there. That was that hope rally that happened in the summer, completely wiped out now, by the way. Excuse me. That summer rally completely wiped out. Nobody tells you that. 5 waves down again. Now we're going to get a lower degree corrective rally, and I think even now this lower degree corrective rally will bring back that hope sentiment to the point where people will be calling the stock market has calling for an extended rally in the stock market. That ain't going to happen, folks. Okay, let's get into the hourly count. Stop babbling, get into the hourly count, and I'll show you what I'm thinking here. So we've got, again, a few possibilities here. The main count I'm going with here in the S&P is a clear 5-wave decline in wave 1 in blue. We've got even yesterday's spike rally, I think, may have completed wave A of 2. So we should get an ABC rally in wave 2, probably towards the 38.50 level. That gives us, a break of the previous 4th wave high, and close enough to the 50% retracement, at 3,900 to call it complete. So 3 waves up in wave 2, somewhere around 38.50. I think we'll call a day to that rally, and then we'll turn lower into wave 3. The alternate count still viable. The alternate count is that we've got a series of 1-2s still operating here. So we've got 1, 2, and in blue, 1, 2 in pink, and then this could be a 1, 2 in black. If that is the case, then there ain't much that you're going to be able to do about it, because it's going to turn lower even quicker than even I might have envisaged. For the moment, I'm giving a little bit of breathing space to the S&P. Possible second wave rally up to about 38.50, I think, maybe on the cards. If we don't break to a new high next week above 38.06, then the alternate count becomes more viable. And I think hold on to your hats, because that could spell the doom for this market. Okay, silver. We completed 3 waves up in wave 4. We filled out the trend channel, and now we're heading lower into wave 5. The count is going pretty standard, pretty straightforward at the moment. We still have lower lows to come, I think, though. Here is the hourly count. I'm calling this decline over the last week as wave 1 in green, and possibly wave 2 now coming our way. There's a few ways that I could view this pattern, which would allow for let's say, a more swift decline to complete wave 5. But I think I'm just going to allow this 1-2 pattern to kind of play its course. If it doesn't work out, or if the decline comes quicker, then we move quicker into wave 3, and we'll just have to deal with that if that happens. But for the moment, I think we could be turning up into a wave 2 correction higher, probably towards about 1980 at the 50% retracement level, and then we turn lower into wave 3 next week sometime. Okay, Bitcoin. Excuse me. Bitcoin daily chart, still looking at the possibility of wave 5 decline underway. So wave 3. It depends on how you view this. This is actually the most bearish outlook here on the daily count. A 1, 2. Maybe we're only still declining in wave 3. If we go to the 4-hour count, in that case, this would be only wave 3 here. Yeah, no, I'm going to leave it like that. I'm being a little bit more, how would you say, a little bit more forgiving to Bitcoin here on the 4-hour count. You can see that we've basically gone sideways. I'm still counting this sideways correction over the summertime there as a wave 4 correction. We're still tightening the range. We may even have broken out of it. It depends on how you view it, to be quite honest. We could have wave 4 complete at that earlier high. I'll go into that in a second. But as long as this range continues and we don't have a breakout in either way, then I think this triangle is probably the best way to view it. And we still have wave 5 down to come. So you can see that this is the triangle pattern. Wave B, wave B, wave C, wave D, and now wave E, pretty much complete. I think wave 4 is done. And as long as the wave C high holds, so that comes in around 24.30. So as long as that wave C internal high of the triangle holds, then I think the immediate outlook is for a decline into wave 5 to begin pretty soon. We might have an alternate count here. This could be a wave 1 of 5. This could be an expanded flat correction wave 2. We'll see how that goes. I still think, for the medium term, the bearish outlook for a decline back below 10,000 is pretty much, if not a guarantee, close to a guarantee. I can't tell the future, but the pattern suggests that we still go, well below 10,000 to complete this wave 5. And if this is only wave 5 of 3, then we go even lower again to complete wave 5 of 5. Okay, so let's move on. Let's get into let's see what the DAX is doing. Now, we have a series of 1-2s, I think is still the best way to view this pattern in the DAX. We've got wave 1 and 2 to begin a third wave, wave 1 and 2 to begin a third of a third wave. So we may not be complete in wave 2 yet. This probably fits the S&P count a little bit better. So we might have a little bit of a ways to go in the rally in wave 2, probably above 12,750 or so. To complete wave 2, and then a decline in wave 3 of 3 is coming our way. And the Nasdaq, again, the Nasdaq is probably more in line with the Dow, to be quite honest. A wave 1 and 2 decline, wave 1 and 2, and then a series of 1-2s again. And that is the alternate count for the S&P as well. So we've got that wave 1 and 2 in blue, a possible wave 1 and 2 in pink, and then a possible wave 1 and 2 in black to begin a third of a third of a third of a third decline. So, if this count is correct, again, it's the most bearish. I know that, that may not sit quite well with you, but it's the most bearish outlook that I can chart. If it's not correct, then I'll ratchet back in my immediate bearishness. Long term, I still think we're going into that third of a third decline, but short term, we might have a larger correction in maybe wave 2 here. We'll extend higher a little bit. I'm not quite sure. For the moment, we still seem to have 5 waves down in wave 1 into yesterday's low. Maybe we'll track higher in wave 2 to a further lower high, and then further come. So the stock market outlook has not changed. The patterns have elongated or extended. I think we'll get there pretty soon. That, I think, is that. Thank you for hanging around. For whoever has hanged around, check out boaz.org. Be sure to go to the website and check out the 90 Elliott waves analysis. Become a member, and you'll be able to read my rambling writings every night. I always, even though I do bring bad news in the markets, I always bring good news to you, good tidings to all men and women. Whatever the markets do, we all know that we're all going to meet our end eventually. You might meet your financial end sooner than later, but we're all going to meet our physical end and shuffle off this mortal coil, and we will go into that long good night. And I hope, for your sake, that you know that your God, your Creator, has allowed or has created a way for you to come back into fellowship with Him again. And that is through His Son, Jesus Christ, the Messiah, the promised one, who died for your sins. He took your sin to the cross. He paid for it all. And all you have to do is accept that free gift, earnestly in your heart. Say that I want that free gift. My sin is paid for, and you're welcomed in as a child of God. Then we all think, there's that saying that everybody's born into this earth. We're all children of God. We're all created equally. Yes, we're creating in the image of God, but our image was corrupted by our father Adam. And unless you take the pill to extinguish that corruption, to make yourself a new creation in Christ, accept that simple good news that someone has paid for your corrupted sin, paid the price for it, and you will be accepted into heaven then. It's such a simple thing. And this ain't religion. Man created religion. Man created kingdoms on this earth. Man created everything. Man created is corrupted. You know that. Just look around. Our institutions are corrupted. God's institution is not corrupted. It's perfect. And we as corrupted beings cannot have fellowship with the... there it is. It's still ringing. We cannot have fellowship with that perfect when we die unless we are clothed in the righteousness of the Messiah. So I would ask you to think about it. If you want any further information on it, give me an email. I'll fill you in. We'll have a chat. Other than that, if I'm alive next week and I'm not already gone to heaven, I'll meet you back in YouTube land again. Have a good weekend. Have a blessed weekend, and I'll see you on the other side. And to all of you who are on the website or are about to join, I'll see you tonight. Adios, amigos. God bless. Bye-bye.